Hello traders, welcome to my YouTube channel. André Cardoso here. Thank you very much for being here as always. I hope you enjoyed my previous videos. And for today I want to share with you a specific chart that I shared among my subscribers and among the community that I work with. And it is nothing more than the 2618 trade setup for crude oil. So for those who are learning process, and of course the objective of this video is to share with those who are learning process, not with those who have experience already. If you have experience already inside the market, you understand this is not my point here is not to push you and to get involved with the market, but to try to get you involved with the learning process, how to identify those process and identify those patterns in fact. So if you are already experienced on trading, you will understand what I will say and the reasons why I'm expecting that market to rise from here, or to start to trade higher from this point. If you are not experienced, you need to, and if you need guidance, or if you need training, if you need to understand how the market behaves, how can I identify the patterns the market tends to produce. That's my goal here, is to offer my 2 cents for those who are learning process, and try to share with you a specific pattern or multiple patterns with you. So that being said, let's jump into our charts. So this is crude oil 2 hours time frame chart. This is a chart from 100. So this is West Texas oil. Not quite the same on the major structure. It's not quite the same as you may see on other brokers or different providers. But the point here is to identify a price zone which allows you to get positioned in the direction that the pattern suggests. So that being said, I identified the technical double bottom for crude oil. We have also that pattern validated with a broken neck. So we identified that V shape here. So we identified that V shape between those lows. So we identified our technical double bottom. And what is a technical double bottom? Nothing more than a retest of the previous structure closes and the rejection of that price zone. So we need to see the price retesting the previous close price without closing below. So I don't want to see the price one candle closing below that price zone. So I want to see a retest and a rejection of that price zone with a clear V shape. So we need two criteria already. So I need a clear V shape between those bottoms, and I need the second bottom to reject to close. I need a retest. I need a price to approach or to retest that price zone, or to nail that price zone. Preferably, I want to see the price coming a few points lower than the close price, but then closing above, kind of what happens here. So we have the price of the second bottom retesting the close price and then closing above. Okay, we have the close of that bottom pushed higher. So that triggers more upside momentum and the retest of the next zone, as you can see here. So we have then later a retracement and the violation of the next zone. That time we have a broken neck, which validates the pattern as a potential reversal price behavior. Some of you will see other traders triggering the double bottom or the double top below the broken neck. So as soon as the market trades above the broken neck, the neck zone, they will try to take advantage of this projection. So we have a projection for that technical double bottom around this price zone 66.35. So this is a 200% Fibonacci extension level, and it's nothing more. Actually, let me correct this. I need to adjust this to the close prices of the structure. So basically we have our projection at 200% Fibonacci extension level, a few points below the monthly fractal resistance, and that monthly fractal resistance came back from January 2020. So that being said, we have projections for the double bottom at this price zone, and you will see a lot of traders, as soon as the market triggers the pattern, trying to get involved with this expectation, which is valid because that's what we expect. We expect a broken neck. The market eventually will retest the next zone and will reject the next zone and will trigger the price above. Usually that's not what I search for. I can do that in very specific moments, that will depend the price structure itself, but in this case that's not what I was expecting. So, and basically I wasn't expecting at all, not even a double bottom. Not the price zone that I was expecting for that price, for that formation, or for that pattern to form. But the market ends up, it's a visual pattern, ends up forming the pattern for me and validating the technical double bottom with a broken neck. What I need to see is the retracement back to the golden Fibonacci level. And that triggers the 61, that triggers the golden 26-18 trade setup. 20 double bottom, 26 61.8% Fibonacci retracement, 61.8 as potential support in this case. So this completes the bullish 26-18 trade setup, and the default target for that pattern, as always, a symmetrical ABCD pattern projected from the low. So we need to identify these lows. Of course, if you want to see, if you will start to project your trade as soon as the market touches the golden fib, so we will project the price there, but you need to adjust if the price penetrates this golden Fibonacci level. If the market trades a few points below, we need to adjust that projection. So that being said, a symmetrical projection, so a symmetrical ABCD pattern, it's the default target and the default expectation after the formation of the 26-18. So we want to see the formation of that ABCD pattern above. So usually the market needs to touch the 127 extension to form the ABCD pattern. To form the symmetrical ABCD pattern, as you can see, the market just needs to trade a couple of points above. So let's say, let's use the 127 extension as our reference for the symmetrical pattern, which will also achieve the default criteria to identify the ABCD pattern. So that being said, we have kind of a cluster zone between these retracements. So the retracement from the highs, the golden Fibonacci 61.8, another one as potential pressure element. So we have one as support, and eventually the market will trade at those levels and will react to that Fibonacci level as potential element of resistance. We have also previous structure support levels, which will not be a surprise to see crude oil retesting those levels again. But the expectation is very simple. I trade it with two targets. One first target, a retest of the resistance, a retest of the previous structure highs, and then a second target extended to the 127. So we have one entry point, golden fib. Of course, our stops needs to be positioned below the double bottom. Then you need to identify the best, if you want to use extended stops or not, but I tend to put my stops right below the lows. So I just need to see the price closing below that technical double bottom to invalidate the pattern immediately. I jump out immediately. I don't want to see what happens next. Even if the market decides to retest the bottom and then bounces, I will exit this trade immediately, because I don't know what comes next. I don't have an edge. I don't have a market behavior that I can identify on previous historical data. I don't have anything, so I prefer to jump out. So that being said, you have an entry point. Of course, you need to respect the technical double bottom, because all the sequence depends on that technical double bottom. So that being said, if the market invalidates that pattern, the technical double bottom, it will invalidate all the sequence. Again, I don't know what comes next. I will exit my trade, and then I use two stops, or two targets actually. I used one at 62.10, just a few points. I use the close price actually. I use the close price unless we have huge wicks. I try to identify the best price zone to identify my first target, but usually, let's say, the previous structure resistance or the price zone around that the price level, and then a second target as a default expectation for the pattern at 127 extension. It's not the first time that the market will be pushed even further. So that being said, not the first time we will see actually 261. Not the first time. I have multiple examples showing you that where you will see the market being pushed to the 224, 261. I'm not saying that will happen, but it's not the first time, and will not be the last time for sure. The market, the 2618 trade setup will offer you situations like this. You have CAD versus yen on a weekly. You have the DAX also on a daily after multiple heads and shoulders and double tops. We have actually on a daily the Dixie 2 years ago actually formed the 2618 trade setup and forced into multiple higher highs above the previous ones on a weekly chart. So identify that. Actually, I can show you that one, the Dixie actually rejecting this trend line. If you go into a daily time frame, you can see here. Actually, I have those patterns here. You can see here we have a left head and right shoulder, the bullish scrap pattern printed below, a double bottom, the violation of the next zone. You go into a lower time frame, you will see the price trading above that next zone, and then the pullback to the golden Fibonacci level. Bullish 2618 with the price rallying. Look at this. Of course, we don't know if the market will. We don't expect that behavior. We expect the price to react step by step accordingly to the environment that we are living at that point or that moment. But that's not the first time that we will see. We have also DAX. I'm not so sure if I will be capable to identify that one for you. But we have here, I believe it was this one, the golden Fibonacci. I believe it was pushed a few points above. I'm not so sure if it was this one. I'm not so sure. But we have, actually it was this one. Double bottom here. I was trying to see this one, but we have a double top here with a broken neck. Let's see if I'm not wrong. Then a support, and this should be the golden Fibonacci. Let's measure. I believe it was this one. Golden Fibonacci as resistance, as you can see. And look the extension. So we expect the symmetrical price behavior. Look at this. So we project that pattern as kind of an ABCD pattern, symmetrical. We have some kind of a pressure there. But if you use an extension, so you want to extend the first swing low and try to search for, let's say, the 127% Fibonacci extension right there. So this is our default target for the pattern, the symmetrical projection. But if you use the look, 261.8, exactly nailing the 261 being pushed below after the formation of the 2618. So that being said, I shared multiple times that price, that pattern already. I believe some of you are already familiar with that pattern, you already know the how powerful that pattern can be. And again, I'm not saying crude oil will rally from these levels. I really don't know if that will happen. I will try to take advantage from what the market offers me. If I have the capability to guide and to ride the market during that process, even better. If not, I will try to get involved in the next time and try to take portions of this trade out of the way as soon as the market approaches my levels. So that being said, that finishes my introduction again to the 26. Actually, this is not an introduction. I talked about this pattern multiple times, but just to share with you in live the price reacting. Actually, as you can see, the price is already reacting from that golden Fibonacci level. Let's see if the market will respect the default expectations that we have for the pattern, and I will try to update this chart later this week. Another thing that I want to share with you, and it's on a daily or on a higher time frame, let's not ignore the potential formation of these left head and right shoulder. So I will not use some draws because that will pop up all my draws again. But as we can see, we have kind of a left shoulder, the head, and the potential right shoulder, which may be forming. Eventually, the market can form the right shoulder at the 78.6% Fibonacci retracement level. Attention to that. So that is the limit to form the right shoulder. We can see a retracement back to the 78.6 to form the right shoulder, and then the price validating the pattern with a broken neck. So that being said, this most recent fractal support may act as a next zone, which should trigger more downside momentum if broken. On the other hand, if you go into a 4 hours time frame, this may also work. Not so much, but some of you may see this as inverted edge and shoulders, the same way I'm seeing this as a 2618 as a bullish setup. Eventually, some of you may see this as a left shoulder, the head and the right shoulder, and above this resistance will trigger the pattern. So that being said, we have multiple situations that can happen. We never know what will happen, but we know where they will trigger. That being said, above resistance, inverted edge and shoulders, below the daily or the major support, eventual that will trigger that eventual edge and shoulders formation. For now, what we have is a 2618 trade setup after that double bottom. And that's all for today. I hope you enjoyed this session and this content, of course, as educational content only. I hope you enjoy it, and I hope you get back later. Try to check my previous videos. If you enjoyed this video, please press that like button. It's always nice for me to see that you enjoy and to actually to correspond with that like button there. Nice to have you here, and see you the next time this week. See you later. Stay well.